Hey, welcome to the podcast, everybody. Thank you for joining me here on this Wednesday evening. Appreciate it. The stock market was a little mixed today after the Fed minutes, and I don't think we expected anything new after those minutes because, again, Ben Bernanke had his press conference, back on, right after that, and so, but the market, as usual, kind of had some spikes and falls and ended up kind of where it was before the minutes came out. But we did finish up on the day. On the NASDAQ, at least, was up 0.5%. The Dow was down about 8 points. The dollar was weaker today. Pretty much a flat day overall. Interest rates were a little higher. But we did get Ben Bernanke speaking after the bell. And that's really where the fireworks kind of began, because he essentially said, regardless of what long-term rates do and tapering and so forth, I think the short-term rates are going to stay low for a long time. So once again, savers, people that want to be risk-averse are going to get punished by earning zero on those assets, and so pushing people back into stocks and other assets. Now the bond market got a little lift from that too, because I think the reaction of tapering has spooked the bond investors so poorly or so badly that you've seen a spike in rates so sharp that the Fed worries that perhaps that could do some damage more than they intended. When they said that, maybe they thought rates were going to go up to 2.25%, and here we are at 2.7% on a 10-year Treasury. So, but what this means is long-term rates a little higher right now, short-term rates still low. All in all, that means that banks could do well, so continue to watch the financials. But overall, the market is a little, there's some mixed signals right now. It snapped back from kind of the oversold condition it was in. And we had talked about buying some stuff for our aggressive strategy back really, I think it was this day on the bottom here when it was really getting hurt pretty badly. And we've been up since then. Now, something to watch here is that you see this downtrend that was in place. And, in the last 3 days, we've broke above it. So that's checked off. So we can take this little line off. And by the way, this little line will stay for now because at some point could we come back and test that potentially. But overall, I think, what I guess longer term people are looking for is this uptrend we were in. Can we get back into it? You see, we're at the bottom end of it. So if it rolls over right now and comes back down, that wouldn't be good. Some people are believing that we may come down and test this low, or maybe even to this 100-day moving average and then bounce again. But overall, I think you still should be getting a little more invested slowly, especially on the dips. But in the very short term, it looks like we may be exhausted. But tomorrow, of course, given the Fed speak, the futures are up after hours. And so let's see if that fades or not. That'll tell you if the market's kind of tired or investors are tired at this point after this move. So we're kind of watching that. But overall, this uptrend that we've been in is still in place. I'm looking for more places to get longer, get more invested. Because, again, there's a lot of noise that we've seen. Currencies are moving. The Fed's speaking. Sometimes they sound like they're dovish. Sometimes they sound like they're hawkish. But all in all, again, they're going to be data dependent. So some Fed governors want them to taper. Some do not. But, look, we know short-term rates are going to stay very low. That's going to encourage people to get into the market. And longer-term rates, while they're going up, so far, yes, it affected stocks early on right in here, but they've bounced back. And so the market is adjusting to rates at a higher level. I still think one of the biggest things we need to be worried about right now is oil. Oil went up over $106 a barrel today. And, if you go back, this is the highest it's been since early 2012. And I think you combine this, with a consumer that has been struggling obviously with the employment situation, and you have oil prices going up, and then you combine that with interest rates going up, and those people who were maybe sitting on the fence trying to buy a house that maybe can't. I think the consumer, we need to watch the consumer over the next few weeks here to see if that data starts to deteriorate, and we also need to watch we know that Chinese data came out weaker than expected last night, so there's still mixed signals. And yet the stock market, the U.S. stock market, continues to do well. Now, again, if you look at this from a global perspective, the U.S. is kind of, again, going on its own accord. We see the S&P 500 It seems like everything is hunky-dory and things are going just fine. And then you look around the world and you see what's happening with gold. And gold's falling, showing some potential deflation. You look at some things like commodities, and those have been falling dramatically. You look at emerging markets, and we know what's been happening there as they continue to fall. China has continued to fall. And so, it's really the U.S. right now that is, the one kind of on its island, as we talked about, where, the Fed's talking about tapering because things are so good. But yet you see all these things around the world, whether it's emerging market bonds, emerging market stocks. You look at commodities, you look at anything across the board, and it's really the U.S. has been the only thing that has done well. Some developed markets, the Germanys, the Japans have done well, but really, again, a diversified portfolio has had a tough time this year. So the focus has been stay in the U.S., and that may continue for a while. It may be all currency related because the dollar, up until now today it was down, but the dollar has been very strong. So let's see what's going on with the dollar, because the dollar being strengthening has not only helped U.S. companies, especially those ones that are selling primarily inside the United States. But so watch, the currencies are having a big play on the overall market. But overall, the market right now appears to be in the very, very short term a little toppy, but the Fed may have interjected some, with Bernanke's speech, may have interjected another a batch of energy into it. So let's watch that. But what I'm looking for is a pullback, maybe a higher test of this, and then I think we could go higher. Ultimately, I think you still want to position for higher prices going forward, unless the data just deteriorates. And if the economy just deteriorates completely, then all bets are off. But right now, I think the data has been mixed and good enough to where it could support higher stock prices, again, at least in the U.S. So let's watch that, but tomorrow will be interesting after this Fed speak. If we see it pop and fade throughout the day, you'll know the market may be looking to reverse and pull back slightly. I'm not looking for major declines, but places to allocate more capital. So that's a real brief one. I've got an appointment this evening, so appreciate it. Thank you very much. Don't forget to check out all the websites and the podcasts and so forth. And if you haven't subscribed yet, just go to karleggers.com. At the top right, there's a subscription. All right, guys, take care.